Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, October 28th, 2021. This video will be brief. I'm going to do a quick update on the markets, primarily the two indexes that I'm watching and trading now, the Nasdaq 100 and Russell 2000 Small Cap Index, followed by a quick update on aluminum via the JJU, the ETF there, natural gas, crude oil, and sugar. All right, so all recently highlighted trades. So what we have here is the Nasdaq 100 remains at that previous peak right here. When it put into the divergent high, triggered a sell signal at this point, went through about a 10% or so correction and right back to where it started. And we have a very similar technical posture. We have a very well-defined uptrend line, just like we had back here, and we have negative divergence forming this wedge type pattern. And so markets, today is going to be a go nowhere day. It always is. When you have especially not one but two of the market leading stocks, Apple the largest out there, $2.3 trillion company, and Amazon right behind it, not far at 1.7 trillion in market cap, top weighted index components of the Nasdaq 100 as well as the S&P 500. So you guys know my thoughts, right or wrong. I think these divergences will play out. And it's just a matter of, do we get a pop up first, a little false pop, false breakout to new highs, that's been the MO, and then break the trend line, or do we break it and go? Either way, there are no sell signals at this point in time, but you do have that resistance of a previous high, and you will have a sell signal if and when you get a break of this trend line. Ideally, probably want to wait till the regular session tomorrow. We could gap up, we could gap down below it, but again, so that's what I'll be watching. And if I don't already have it, let me make sure I have an alert set, although I'll be watching this closely tomorrow. Okay, that's that. Really nothing else to add. I've already covered the FANGs and the long-term outlook of the markets quite a bit lately. Small caps, let's just, we can look at IWM. I know some of you trade IWM, and we'll look at RTY in a second here. Simple stuff. Look for these divergent highs, correction, divergent high correction so far. Hit that 224.48 target. In fact, we hit to the exact button the first target / support level I have on RTY, the futures, I'll get to in a second. So this bounce was to be expected. That's the initial tag of support, and I'm still favoring a move down to the trend line there. RTY, small cap futures, literally doesn't get any better than this. This is that levels. I give you two levels, 22.48 and the uptrend line, and you can see we hit that 22.48 level perfectly and bounced. So that's it. Biggest drop we've had in a while. Nothing goes straight down. All corrections and rallies happen in waves, and so far we had an impulsive drop, the most impulsive drop in a while, and perfect kiss of that support. In fact, you had a couple opportunities to, if you're an active trader, to book profits. And then where to recycle in? Right about here. There's minor resistance there. I can just eyeball it. It's close to a 50% retracement of the bounce, somewhere in there. And it's hard to say. I don't have a hard stop point. I don't have hard resistance, but I think it's certainly objective to cycle back in here for the next leg down to that trend line. Again, the divergences tell me, and rarely do corrections, especially this magnitude, happen in a single wave down. Minimum usually get an ABC corrective wave, and so that's that. Again, objective short entry if you missed the original breakdown right now. Kind of it's not, again, not at a hard resistance level, but if you're just going off Fibonacci's, you can look at it that way. Okay, and speaking about impulsive drops down to a price target / support level in a reversal, this one also to the button, to the exact penny. JJU had this uptrend line, and right coming in together with it close enough as that 55.70, and that was the first target. And actually, I might have had that line. No, that was the bounce target I gave you yesterday if you wanted to close out the long here. The short trade. Low of the day, 55.70. So I can't get much closer than that. There's the bounce, biggest bounce that we've had in aluminum in a while, up 4.3%. That's why active traders can sidestep that, even reverse to a long. And again, this trend line is still going to be, I consider that a hit of the trend line. Like I said, when you have price support in very close proximity, it's likely you're going to hit that level. And it was pretty well defined too. So yeah, again, if you're gaming a bounce up to there, no doubt, go ahead. If you're short for a additional leg down, which I think there's a good chance we'll get. Felt stronger on this. You can just short it around 59.10 with a stop somewhat above. Somewhat's going to be, again, relative to your price target. If you're going to swing down for a move to any of these next support levels, that's my maximum target, 49. Then you do the math on it. If you short at 59.10, you say, okay, I'm going to hold out. I want to target $49. That's another 17% drop from 59.10. So you can use a 5% stop loss. 5 or 6%. 5% gives you about a 5-6% gives you about a 3-to-1 risk reward ratio, and that's pretty attractive. All right. Next up, natural gas. Okay, so on that gas, recently I told you I had 2 trend lines. This one here, and then I added this one a little, I don't know, last week I guess it was, and talked about when we put in this divergent low back here. Remember, we got a sell signal back here on the break of this trend line, this wedge right there, and hit very good support, not only on this 60-minute chart we're looking at here, but more importantly, the primary uptrend line on the daily chart that I showed you. That was hit at the exact time they came in together. So again, there's another example of price support and trendline support together, or very close proximity. And you got the counter trend rally, which I said, back here could carry up for a back test. At the time I had this trend line, but then I added this one here, and I said I did that because we had the same initial reactions there plus this reaction that I hadn't captured before. So that just kind of was a move through there, but enough reactions. And now here's the thing, more importantly, now we have 2 distinct reactions, both followed by impulsive selling. So far sellers are stepping into the trend line. So what I'm going to do right now is remove this trend line if I can. Let me highlight it, and there it is. It wants to catch, I know it does here. I'll have to pause the video and do this. Sometimes these trend lines are there it is. Remove that trend line. So that's it. And now this one I'm going to color it up a little bit, or just make it a little bit thicker, and that's the trend line to watch at this point in time, because we have 3 reactions there. So my best guess, now look, it was a swing trade. I made the case for a longer term top, a bigger double-digit correction in nat gas after running into resistance up here on the daily chart. You don't see it on the 60-minute chart. So I'm giving you just best guess scenarios for zigzag, something around here. You have a gap, you have the trend line, and then you have price support. So somewhere in here, maybe a bounce. Depends on your trading style. If you're very active trading, I can't make a strong case. Here's why. I prefer to sit tight right here and hold out for at least another move down here to that 4.973. Why? Well, look what happened. Just on this most recent thrust up yesterday or last night, whenever that was, we now have, again, negative divergence on the 60-minute time frame. We did not have that on this tag of the trend line. Now we do on that second kiss. Higher high in price, lower high in the indicators, and that's it. That's what I like to see. So you get these divergent highs, and really once natural gas turns, this was a counter trend rally. If this is the next leg down, yeah, you might want to try to get cute and try to game the counter trend bounces at this point in time. That's why I'm more apt to just leave some stops in there, maybe just above those highs if you shorted the back test or something like that, and hold out for another move down. And keep in mind, we've already checked the 497.3 level a couple times. Probably get another reaction if we get there again, but it's possible to just go right on through there. So let's see what happens. That's natural gas. And UNG, of course, is one of the ETNs. What is it? KOLD, I think, is the 2 times short ETN, so you can buy that instead of shorting it if you don't want to short UNG, or buy NG, or QG, the mini contract for nat gas futures. Not last but not least, I have 2 more. I'm going to do crude oil and sugar. Crude oil, nothing really new to update there. Let me grab that. 60-minute chart. We're still holding above the trend line, the primary trend line on the 60-minute time frame. Again, that trend line comes off the about August 22nd low right there. Enough reactions, quite a few, and more importantly, more reactions here. We're consolidating on that level again. And here's one other instance where you have both price support at about 81 and then uptrend line support. So big level, and that is there's your objective add-on or new short entry on a solid break below that. Solid means, it's volatile. Gasoline, oil, or nat gas, crude oil. they're volatile commodities, so they're going to spike through there. You want to see a solid 60-minute close, solid break. You'll know when you'll see it. There'll probably be a lot of stops hit and a lot of short sellers pile in, longs exiting on the break of 81, and then you already have my targets here. And sugar's been sweet for the last few days. Couldn't resist. Anyway, there's the uptrend line. It was along there. Believe me, not a big trade, but just a bounce trade. I'm not crazy about this. I don't have strong convictions. In fact, we're probably going to correct now. More than this little correction here. We do have support. So if you're in it and you're holding out for a move up to that potential target up there at 0.2036, keep in mind you have support there, which was the first target at 0.1948 or so, and we could hold that and bounce. But here's what I don't like about it. Remember, this was I think super simple but pretty effective strategy. I pointed out, just go long at these low-level PPO bullish crossovers, or not even the crossovers, the dip down to that extreme level of negative 1.2 on the PPO right here, right? 60-minute chart. Nope, 120-minute chart, 2-hour candles. Just likewise, that's where you're buying based on what the PPO is doing. Of course, obviously price support, all the better. You want to see that as well. But look what happens here. We just had a bearish crossover on the PPO, in addition to an oversold reading. So follow my arrows here. All right, and look what happened. We were oversold. This one we went a little higher because you had divergence, and then there was that second oversold reading. We were oversold, but mainly look down here on the PPO, bearish PPO crossover, bearish PPO crossover, boom, down. After that, bearish PPO crossover, boom, down, boom, 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 boom. All right, you get the point. So yeah, it's not a high level, but it's lately where sugar has been correcting, and so that would probably bring us back to that trend line again and that 1908 support level. So that's my best guess where we're going. So might want to book profits there, or again, sometimes these patterns don't always play out. Sometimes as soon as I recognize a pattern that's been happening, that's about the time it stops working. But anyways, I thought I'd share that with you. So probably not a bad idea to move on. Plus, I'm not crazy about the daily chart on sugar and everything else. I just was looking for this as a bounce trade, and that's what it was. So I'll move on to the next one. Oh, and I promised you a short video, and I promised to include, to cover everything that I threw out there in the beginning of the video, which I did, but I wanted to add this. I totally forgot. Wanted to give you guys an update on E7, the euro. So remember recently, this is the euro 60-minute chart right here. We had a breakout, and it's been just trading perfectly. These levels laid out in advance, all these levels. I wanted to point out that we've just hit my 116.88 target. Remember, we fell just shy of it there, a little shyer than usual. Came up again, fell even a little more shy, lower and lower each time. But look at that, and just again, a beautiful. Sometimes I get a little dorky about the charts. Some people like art, some people like other things. Charts to me are art. Beautiful display of technical analysis. We put in that divergent low right there, and right off that support, that 116-ish support level. Remember, it was resistance here. We broke out, back tested, fell to it, been consolidating. You get these little areas of consolidation, and then boom, and once you break them, that's the next trend. And then look at that, broke it, pop right into that 116.88. So now it's a full hit, it's a check. And now you might be wondering, hey Randy, well, okay, that was a big move up in the euro, biggest, sharpest move in one-day move in a while. Why didn't silver take off? Well, my opinion on that is because if you're trading, incorporating the euro into your trade for gold and silver like I am, you realize it's just ran into resistance. Yeah, it went a hair above it, but that's what I call momentum fueled overshoot. I mean, do you see a move like this in silver and going back at any point in time that just kept going? No, you get that overbought in the very, very near term. We're talking 1-5-minute charts. Usually you're going to correct. So point being, at best, I think the euro will probably consolidate here, and I think that's why gold and silver didn't react so much to that spike up in the euro. It happened so fast, and then by the time you blinked, it was there at resistance. So now we'll probably consolidate here, but so far so good. This 60-minute divergent low, whether we consolidate then thrust up, whether we come back down a little first then thrust up, either way, a solid break above that level, ideally after some consolidation or pullback, should open the door to move up to my next target at 117.90, and that should be quite bullish for gold and silver. Until then, like I said, I don't know, today, tomorrow, maybe a little consolidation, but I would, if anything else, let's look at silver and gold, and I'll tell you, if again, everyone's in different parts or stages of that trade, if you're even in it at all. Some might have a full position, some might have no position, and some of you might have in between. So there's gold, still looking fine for now. Is it objective data on? No, because it's at resistance. Remember, this was that's been a resistance level for a while, 1809, a target. It's been hit several times, but just like the euro, gold's going to need to pop that. So there's another reason gold didn't run. It needs to take out that 1809. We've been dancing on it for a while, and that'll open the door to my next target at 1838. There's a trend line to watch. Not great if the trend line breaks, but certainly not the end of the world, because gold's so far off the recent lows. It could break that trend line and pull back, and if it does, 1783 support. You could buy it there. I don't want to see this, but it is possible. Remember, we're still in a big trading range, and until we clear 1838, you can get these corrections. I think it's going to happen sooner than later, so I'm more apt to just kind of sit tight and move back into swing trading or even trend trading mode, and then most certainly it'll be a good trend trade, I think, if 1838 gets taken out. So either way, let's see what the euro does. The euro gold, this is what I'd still favor. Another pop above there, whether we pull back first or not. Another move up to 1838. And then last but not least, silver. Silver futures, SI, same story. Silver is walking up the uptrend line, and another pullback to that. Remember, silver kind of got ahead of itself. It outperformed gold. It hit my 24,867 target the other day, and it had a pullback. And I think this will happen. We'll take out 24,867 if and when the euro takes out that resistance I just showed you we're at. It's on the trend line, and it's also on price support 24. So a case could be made to go long here. But again, you have the euro at resistance, you have gold at resistance, so I'm not so crazy about it. Just kind of, if you're in this trade, hold on, give it a little room. If it wants to break down, it could certainly do that. And still keep the the bullish outlook intact, even if it took a while. Let me just show you one scenario here, just one of many scenarios. All right, so I'm going to draw something here. I'm going to draw a neckline, that 24,867-ish level. This could be your left shoulder. This could be a head, and we could put in a right shoulder here. So left shoulder, head, right shoulder. That's called an inverse head and shoulders pattern. It's a bottoming pattern, excuse me. And the neckline's at about that 24, we'll call it almost 25. And so if it pops that level, the measured target on an inverse head and shoulders pattern is the widest part of the pattern from the head to the neckline added to where it breaks out. So that would bring you all the way back up here. Quite bullish if that happens. So again, one of many scenarios. It's only a potential inverse head and shoulders pattern because we don't even have a right shoulder. So if we move down there and then move back up and finalize the right shoulder, then you have a pattern, but you don't even then have a breakout yet. Any pattern is only a potential bullish or bearish setup. The breakout would then be your buy signal, and that's that. So, and now you can game these. I pointed out because if it starts to materialize that way, you can step in long, whether it turns out to be an inverse head and shoulders or not. Like I said, a pullback to 23 is still objective in my opinion to add on to a trade with a stop somewhat below it. And all right, so that's that. Last thing, one other potential scenario if we do get a correction that's a little more than that. Well, you have a trend line that hasn't been back tested yet. There's our primary downtrend line on the 120-minute chart. These are 2-hour candles, so we could come down slightly, undercut 23. That's why I wouldn't have too tight of a stop there, and back test the trend line and then off to the races. So anything much more than that, it starts to look ugly because you're going to run at those lows. But if and when that happens, let's just see if these divergences are still intact or not. All right, I'm going to wrap it up here. 19-minute video, not too bad. Get this thing out to you. And if I see anything big by the end of the day, I'll do another update. Otherwise, we'll pick it up tomorrow after Apple and Amazon have reported after the close today. This has been Randy Finney with Right Side of the Chart. Have a great day.